With its IPO just days away, Facebook's long-term challenge is to turn its data into gold. I'm Catherine Rampell, reporting for Business Day Live. I'll be speaking with Somini Sengupta in California about Facebook. We've also got an interview with an economist who says Europe's governments aren't the only ones in debt across the pond. But first, I'm joined by Nelson Schwartz for an update on events at JP Morgan Chase. Nelson, thanks very much for joining me.
Great to be here.
From what I understand, the latest updates are that there were actually a number of red flags throughout JP Morgan ahead of the news of this tremendous loss. Can you talk a little bit about that?
Yes, basically the narrative so far has been that everyone was kind of caught by surprise in late April by the scale of the losses that were occurring. It turns out that warnings were raised by people within the chief investment office, that's where the losses occurred, that the positions were too big, too complex, and that the risk controls weren't sufficient, and that people in the investment bank raised those concerns as early as 2007 and then again in 2009.
So how does this reflect upon Jamie Dimon?
Well, the question is, why weren't those warnings taken more seriously up the chain of command? Obviously, once Jamie focused on it...
And I should clarify, Jamie is the...
Jamie Dimon is the chief executive.
Chief executive, yes, thank you.
I mean, once Dimon focused on it, then, you know, they dealt with it and, you know, it came out, you know, everything's, you know, been out there. He's been on a public campaign of contrition. The question is, why didn't they find it earlier, and why weren't these warnings taken seriously by him?
So today, the shareholder meeting is taking place
Exactly.
in Tampa. What can we expect from that meeting?
Basically, it'll be very interesting to see how critical shareholders who speak are, whether people rally around Jamie Dimon or whether the ire continues, and just to see whether, or maybe whether he gets credit for going out there with this and you know, and apologizing. I mean, to be honest, other banks might not have done that. Other CEOs are much more bunker mentality. So it'll be interesting to see whether he gets any credit for that. Be interesting to see whether people say, well, there should be a separate chairman and chief executive. Jamie Dimon is both. It'll be interesting to see whether any new details of what went wrong come out.
Will we have any inkling as to whether there might be any civil suits coming down the line from this meeting?
I don't know if we'll hear about civil suits this meeting, but one thing to really keep an eye on is what regulators will look at, and I think regulators are really going to be scrutinizing these red flags that were in the chief investment office.
Well, Nelson, thanks very much for joining us.
Good to be here.
Last night, Facebook increased the price range for its initial public offering. That will likely happen sometime later this week. But the high value of the company has raised questions about its ability to meet expectations for growth. I'm joined by Somini Sengupta in Oakland, California, to discuss how Facebook might cash in on its treasure trove of data. Somini, good to have you here.
Hi, good morning, Catherine.
Facebook is known for having this gigantic set of data on its users all around the world. How good of a job has Facebook done so far in monetizing that information?
Yeah, you're absolutely right. The core asset or the crown jewel that the company has is the personal information that its 901 million users voluntarily share with the company. And that's just an amazing number, nearly 1 billion people. And Facebook has their names, their pictures, their locations, their friends, and what they like. The company has been able to use that to serve up ads that are tailored to each user. And those ads have generated $1 billion in profits in a very short period of time.
But $1 billion in profits does not necessarily mean $100 billion valuation, right?
Right. So the question is, what more can Facebook do with that data, and how quickly? Because its would-be shareholders are going to be impatient, and they're going to want to see, some of them are going to want to see very fast-growing profits to justify this kind of valuation. Now, there's one school of thought that says, look, we just don't know what the company plans to do with this core asset. There are many ways to spin this into gold. And right now they have shown one way, which is advertisement. Now, advertising may continue to be its principal source of revenue, just as it is for Google. And they will just have to generate much more advertising revenues in the coming months and in the coming years. But there could also be other ways of monetizing that core asset. Things like expanding the use of Facebook credits, which is a kind of virtual currency that's right now used to buy virtual games by and large, but theoretically it could be used to buy and sell other goods and services. The problem with that is it might invite a bit more regulatory scrutiny than the company would like.
Well,
and there are probably other ways of monetizing the data that we haven't dreamt of, that maybe somebody in the company has dreamt of.
Well, I would imagine,
we'll
though, that
see.
one of the concerns would be that their users could turn on them, right? I mean, if people are voluntarily sharing this information with Facebook and then they feel like that information is being sold or otherwise used to further invade the user's privacy, could that mean that users would feel betrayed and no longer be as actively engaged?
Facebook makes it very clear that its policy is not to sell the data. And why would it? That is its core asset. But yes, you're absolutely right. The trick here is balancing the expectations on the one hand of marketers who want more data from the company, and the expectations or the comfort level of its users, who are still kind of learning this new landscape and still feeling comfortable with it. So I think in the coming years, how users will feel about their personal data being monetized, how regulators will react to user concern, that will be a big challenge for the company. And they cite it repeatedly in the documents that they filed with the Securities and Exchange Commission.
All right. Well, thanks very much for joining us today.
Thank you.
Finally, the sovereign debt crisis in Europe is increasing concern that Greece might withdraw from the euro. Yesterday, I spoke with research economist Srinivas Tiruvadantai about the sovereign debt crisis. He had a surprising thesis about it.
One of the big misconceptions about the European problem is that it is a sovereign debt problem. Actually, the sovereign debt problem is a manifestation of the private sector debt problem. As in the US, the private non-financial sector in Europe, which is private non-financial corporations and households put together, they ran up large debts during the last decade. In fact, the private sector debt as a scale to GDP was higher in Europe than it was in the US at the peak, which was in 2008.
And are we mostly talking about consumer debt? Are we talking about business debt?
Both combinations. Some countries have both high levels. Some countries have more of the business debt but less of the consumer debt, and some have less of both. For the Eurozone as a whole, both of these were high, in particular non-financial corporate sector debt. But if you go to countries like Spain, you can see the household debt was also high, and in fact higher than US. So
what's been driving that?
They had, of course, a huge mortgage boom in Spain, in Ireland, even in Greece, actually, they had a pretty big consumer lending boom. And in the private non-financial corporations, the whole of last decade was driven by lending and borrowing and leveraging up your financial structure.
So this is not a uniquely American
No, it is not a
sin.
uniquely American sin. The sovereign debt problem in Europe deflects our attention away from the underlying causes.
So what are the implications of having such high private sector debt in Europe, both in terms of Europe's economic future and its place in the global market?
When you have a large private sector balance sheet, you have a fundamentally unstable situation. When it can keep growing into a bigger and bigger problem, but when it starts reversing that journey, as we have seen in Japan and we have seen in US, what you have is a fundamental problem of the private economy to sustain itself, to grow profits. You need large fiscal deficits to stabilize the situation, and you need large lender of last resort to stabilize the financial system.
And that's some of what we saw in the United States, right? That there was a shifting of debt from private sector balance sheets onto the public, the taxpayers' balance sheet.
In this environment, fiscal deficits are necessary and unavoidable. If you try to cut it, you will get the economy will weaken and you will get back to large fiscal deficits.
But that's been the strategy so far in Europe, right? I mean,
And
there's
that is
this
why-
German-led austerity measures and all of that to actually cut
Yes.
fiscal debt.
Yes, exactly. They try to cut the debt, the economy weakens, and they are back to square one. In fact, they're actually worse than square one. It's worse than Sisyphus. And Japan also went through the same thing to some extent. You could see that whenever things used to stabilize a little bit, there would be big pressures to try and cut the fiscal deficit, and that would actually put them several steps backward and entrench the deflation. I think that's the similar kind of problem in Europe, compounded by an unworkable political structure.
That's all for today. Please stay with us online at nytimes.com for our continuing coverage of this and other stories. I'm Catherine Rampell, reporting for Business Day Live. Thanks for watching.